Markets love to climb the wall of worry, and in the early stages of a new bull market cycle, this is when it is the most difficult to get into the markets. This is the old saying, buy low, sell high, but the masses are still looking for further downside collapses that could take the markets past previous cycle lows. And if you've been following the market for over 12 months now, you would have seen this firsthand, which is fantastic for you as an investor because it is starting to build your experience in the market. You see a cycle low, a higher low on extreme fear, then you see more higher lows start to form in the market on more extreme fear, yet the prices keep going higher. So in today's video, let's have a look at what Bitcoin is doing short term as it starts to break down from short term targets, what that could mean for the downside support levels, what's going to happen with the Nasdaq as it starts to breach some of the upside targets, also the SP 500, and we're going to look at forward returns for these markets coming up for Q4 and of course into 2024, which looks to be the time where we may see new all-time highs for Bitcoin and earlier for the S&P, or at least early in 2024. So I want to get to all of that data in today's video, but you know the deal, like and subscribe. 1 out of 4 of you still haven't subscribed. Let's do that and keep crushing these subscriber counts in the quietest time in the markets. Right now it's going on. So this was the previous video that I put up. We saw Bitcoin and the S&P diverging in terms of their price. This was on the short term, Bitcoin heading down, the S&P going up. We've seen the S&P have a slight correction here as it gets towards the 50% level. And of course the bears jump on board, calling for bigger downside targets. But we got some pretty decent data to go through and revise as well, because what we've been seeing over Q3 and now into Q4 is essentially what the roadmaps have been saying. If we've been prepared, we've been ready for this. What we've been looking at is the consolidation after the market has run up quite significantly. And of course, this is all going to play into the Bitcoin cycle as well, as we need to see the rest of the market, or the market participants, the investors, all flocking back to the market after our bear year of 2022. So after significant gains in 2023, or at least from the cycle low of October 2022, and the majority of the gains here are now had in 2023, of course, we need to see some sort of correction. And so that's basically what we've been looking out for. August, September, October. Here is your November line, a little crooked, but that nonetheless, there it is. And essentially, we start to see Q4 head up again. It doesn't have to follow this exactly. This is just a roadmap. You see huge gains, then you need to see some profit taking. Then you have the bears thinking the market is going to collapse again to previous lows to take out those very, very fearful lows. This was the banking crisis low. The market is, in my opinion, based on my analysis, very, very unlikely to take out these lows. And it looks like we're in the process, as we've talked about, putting in a new low, new higher low for the S&P 500. Here was the August low, here was the October low, which is basically a 1-year anniversary to the previous low. Fancy that, exactly 1 year on, one week short of 1 year, and you get another significant low in the market. Now that brings me to the video that I did end of September for the October analysis. And in this video, we specifically covered that markets like to find bottoms in October and March and June. They're the typical months that the market, the S&P, likes to find lows. And yet again, we've seen another low. We still have to wait to see it break out of these highs, but it seems like this October timeframe is shaping up to be yet another low, just based on what the market has given us. So with that in mind, we can start to look forward to some of the data that we might see over the next 12 months. And this one is pretty good here, looking at what's happened after bear markets, or close to near bear markets, because essentially you need 20% decline for a bear market. So these three here, 19.4, 19.3, 9.9, 1 month after that low, these have been the returns. That data is roughly average of 37%, with the median being 33. Now we've got that data in now. We're 1 year, I should say. If I said 1 month, it's 1 year on from the bear market low. For the S&P 500, of course, as I said, this is all part of the preparation for the Bitcoin cycle, because as the S&P continues to climb and hit new all-time highs, that leads more investors into more speculative assets like Bitcoin and then altcoins as well. So it just takes its time for the money to flow through the markets. We're seeing it in the S&P. It's all coming to fruition. The bears have been wrong from a macro perspective. Short term, there's going to be profit taking. That's what we've just seen in the markets as well. But let's get back to the data here. We've seen first year return results. As I've said there's the average, there's the median. 1 year later, 100% of the time, the market has been up from those bear market lows. And 2 years later, for that second year, again, it's been 100% hit rate. Of course, anything can change. I always have to, or I want to put that disclaimer in there, because there are no guarantees in the market, just the probabilities and how we react to those probabilities. We see the average and the median 13.5% and 14.5%. But this means that we had one of the lowest recoveries from the bear market. But that usually throws a lot of people off, thinking that, well, it's lowest, we're going to see another lower year ahead. You've got to put it into perspective with how far the market came down. So if you have a big decline, typically you'll see a big bounce, and then the market just try to recover. If it's going to keep going down, it'll keep going down. If it's going to start to go up, you'll see it break highs. We've seen the market break the highs, but the recovery hasn't been as big as previous years, because this fall has not been as big as previous years. It's that simple. It's like if you drop a ball off a 100-meter bridge, hopefully onto ground, not water, you would see it bounce higher than if you were to drop it off your balcony here, maybe 2 stories, which might be about 6 meters. You wouldn't see it bounce that much. So if you're seeing this thing dump off a huge top and it's a big drop, like the .com bust, which everyone loves to reference, going back to 2000, then you're going to see a bigger recovery quicker, and it's more prevalent on the Nasdaq, of course. Big drop, 80, 90%, of course you're going to see a rebound at that time in a higher percentage. It's just logical. So if it's not as big of a drop, then in that first year or so, then you don't expect to see the recovery as big as something that has dropped 57% to recover 68%. So we saw about a 25% drop, 22% recovery. Second year though, says there's a 100% chance of us seeing a positive result. Let's see how we go over the next 12 months. I suspect we'll probably see a positive result, and worst case, I think it's going to be somewhere at the lower end if we're to get the first negative here to make this not 100% anymore. It doesn't seem like it's going to be too far off, especially leading into a pre-election year, and we're in the second half of the real estate cycle where the markets get more speculative, more bubble, more money coming in, and markets going up. Money from the sense of investors, not necessarily the Fed printing more money. This is the big time to be prepared for the market to go up, because we're expecting a big collapse after 2026, a very big collapse. So I'm not perma bull, but we need to prepare to make the most gains from the markets now, because there is going to be some severe heartache after 2026. Okay, so get very, very prepared. Don't let the fear wash you out of positions now or pause you on your trading plans because you're fearful that the market is going to collapse in 2023. The collapse is coming, but if you stall now, you will miss these lows in the market. So looking at the S&P 500 short term, we've seen a slight pullback here. I think this area is going to be the best buying opportunity for the S&P 500 since the banking non-crisis, because at the end of the day, the market's gone higher. So you've actually made money from a banking crisis, and you've made money from a US debt ceiling if you were invested at those lows, and the recession fears, and the interest rate hikes, and the inflation fears, and the Russia-Ukraine war. Remember, we're putting all the politics aside here and just looking at the price chart, and the chart is up, higher lows forming. Now, if this is the higher low, and maybe we come back and test it, we're probably looking for somewhere around the 4,300 level to retest. If not, we've just tested it at these higher levels at around 43.50, 43.60. So everything is looking relatively on track here, as we were anticipating for quarter 3 into quarter 4 sideways consolidation after a strong start to the year. Now, to the Nasdaq, it's actually stronger than the S&P. We've seen increased volume through these up days. We saw a reversal with a higher low. This is 3 points higher than the previous low. Strong volume came back in on the green day. More strong volume came back in on the next green day. You saw lowering volume on the red, so less selling here and more energy pushing the market up. Strong 1, 2, 3, 4, 5 days up here, and now we've finally had another pullback as well at the 50% level. The volume has dropped off on the last of these days to the upside, so maybe we're going to come back to test somewhere in this zone here. Roughly speaking, 14,900 to 15,100. So I wouldn't be surprised if that was to happen, but wait and see what's happened. Maybe this has been the test here at 15.2. Nonetheless, it's all short-term stuff. It looks like the low is in also for the Nasdaq. We have to wait and see if the market can sustain its level above 15.3 for that to be confirmed. Other than that, this looks like a reasonably good move from the Nasdaq, and the tech stocks are going to continue up and leading the charge into higher prices. Now for the USD, we did see one day up again after 1, 2, 3, 4, 5, 6 red days down. Almost could call it a seventh here, even though it's a green day, it did go slightly lower. So there's a fairly good chance that that market was going to finally bounce, especially at those other lows. What the USD bulls are looking for is a break above 107.5 and consolidation to then take it to test the next price at around 109.5. So until that happens, then you're pretty much erring on the side of caution here that this could be, not guaranteed, but it could be just a distribution pattern for the USD to then come back down to test the 50% level at 103.5, which will potentially ease the pressure on the assets, your stock markets, and of course, onto Bitcoin. So looking at BTC short term, we did get that rejection at 23,400. This was the level. We've been going on about it so many times. 23,400, super key level for Bitcoin to get above and hold for the bulls to take control and test 32 again. In terms of time, it doesn't seem like we're there just yet. We still have a fair bit of time left before we start to head into new all-time highs, which we're expecting probably late 2024, at least for BTC. You could possibly say early to 2025, but probably sometime second half of 2024 has been what we've been saying over and over again. You've also got the timestamps here, the receipts to go and check out the previous videos. Here's your S&P and Bitcoin market cycle countdown, going through a lot of the data that we're looking at to project us forward for October and quarter 4 of 2023. Now, short-term stuff, Bitcoin needs to get back above 27,300, as that's the 50% level here for this last move up. That's the short-term target for the bulls to consolidate to at least test 28.4 again. If Bitcoin cannot get above that level and consolidate, then this is likely another move to the downside to test 26 again. A break of 26 is likely then a test of 24.9, and our major 50% level here is at 23.6. So keep in mind these next few targets, especially if Bitcoin is unable to get back above 27.3. That's your number to keep in mind. Still a few levels off, so let's keep that in the back of our minds while Bitcoin goes on the testing of these shorter term timeframes. In terms of the shorter term timeframes, we're looking at 6-month returns here. This is going from October to April and then October to October in 2024. So we had a hit rate of roughly 70%, looking at buying on October 1st, and what happens 6 months later, March 31st, April 1st, roughly around that date there. And 10 times out of 14, it's been a positive return. So looking forward to April of 2024, even if Bitcoin drops to 23 or it pumps to 29, typically the market 70% of the time has seen a positive result 6 months later. Now, if we remove the bear market years of 2018, 2019, and then also 2014, 2015, then this obviously improves the percentage return here to 86%. So there's a higher chance that you'll see a positive result from October 1st into April of 2024. Now remember, we're looking at this stuff longer term. We're not too focused on the day-to-day of the 27.3, but it's important just to keep it in mind because that does play on the emotions of the investor. So let's keep those numbers in mind in case we do see those numbers. Then it's easy for us to prepare and say, well, we're expecting that because the technicals have said that already. So looking forward, potentially an 86% chance of a positive return from the 1st of October into 2024. So keep that in mind if you are getting into BTC. If we were to see it, come back and test some lower prices and potentially bounce from that point as well. Now, this data is something new that we're putting together as a new dashboard for subscribers of TIA Crypto. If you want to get notified about this once the dashboard is out, super helpful for your longer term investing. Make sure you use the link in the top of the video description. Subscribe, first name, email address, straightforward, and then when it is ready, we will let you guys know. It is a subscription basis. I just wanted to make that upfront with you, but nonetheless, I found this extremely helpful to go through, and there'll be plenty other features of this new dashboard as well. So in terms of the longer term stuff that we're looking at for all-time highs, this is the second stage of the 3-year bull market. So we have first, second, third, fourth, fifth, sixth, the last 3. So these are broken down into 6 months of the 3 years. That's why you have 6 and 6 are 36. The last 3 of these typically have a cleaner trend to them because that's the end of the cycle. That's the retail bull market, the mania, and when the altcoins go crazy. But it's the riskiest time because everything is just going straight up and it could go straight down. So the emotions get very, very hot and wild. But the first 3 are the trickiest times because this is when the bulls are saying one thing and the bears are saying the other. The bears are expecting a collapse and the bulls are saying, no, it's going to go straight up. But of course, none of those are right. We often see a lot of grind through each of these phases, first, second, third, and then things start to get a little bit clearer in terms of the picture. And we've got a few weeks left until we start to enter phase 3. So I just wanted to start to prepare in that sense and see what happens to notify us about that stage 3. And what we've seen in the past from the S&P is typically through this accumulation, we see the S&P hit a new all-time high, come back, and then hit another new all-time high. So you can see that's happened multiple times here in the previous accumulation. Meanwhile, through 2020, Bitcoin was testing $4,000 and then started to grind its way higher until late 2020 when it started to break through into new all-time highs. So that was through stage 4. So for the S&P, if we go back another cycle as well, just to test the theory here, you can see in 2016, that we had one test later in the accumulation phase that we got a new all-time high for the SP 500. Earlier in the accumulation, there was another new all-time high, and we also saw significant pullbacks for the time in the market. These were quite severe for 2015 into that early stage of 2016, that many thought that the SP 500 was time for it to collapse. And of course, we know from history that was completely incorrect. So couple of all-time highs are what we're looking for, potentially a pullback as well. Are we seeing the pullback now and then we're going to test that new all-time high later this quarter, or I'd say first half of 2024? I think that's a likely chance for the S&P 500, and I think that's going to be one of our first signals that we're still on track for the next iteration of the Bitcoin bull market, where we start to work our way higher in this third phase of the bull market, or at least the third stage of the 3 years, breaking it down into 6 months. You can see the previous time here in 2019, 2020, it started to work its way higher. This was looking like it could be a significant low. Of course, COVID happened and the market quickly dumped, but it recovered quite quickly back to the price range of the previous low. So those lows were in December of 2019. Market started to climb out of that. COVID, quick bounce back. So that tells me that that price range of roughly $6,500 to $7,500 was basically the true value of Bitcoin for the time. The COVID crash was the fear getting rid of the weakest hands in the most fearful time, and then the smarter hands were buying up very quickly because you only had a matter of weeks to get back in. And I know it sounds like a long time, but if you remember 2020, March and April, it felt like an eternity with what was going on around the world. So pay particular attention to the fear at that time, and then also looking at those price levels. Let's look at the third stage of 2015 as well. You can see we shot up in the second stage here. So this was the second 6 months, and then we went sideways. We were grinding along sideways, but we never came back to that previous accumulation zone. And the same pattern repeated where we broke out, went sideways, started to grind around and climb higher before we got another breakout from that point. So nothing happens exactly the same, but we're basically prepared for both situations where it goes dead after a big push and then another big push to the upside and goes dead, or we find a low, start to grind our way out, maybe we have a severe pullback and then another grind sideways. In either case, there are two grinds in that period of the third. You've got a grind at the low and then a grind again before the fourth takes hold. In the third, you've got a very, very long grind here, and then in the fourth again, another shorter grind as well. So we're not at that mania stage of the top of the bull market, the retail crowd that comes in late in every single cycle. You'll see it in the comments section, some of the people saying, crypto's dead, what are you still doing here? Bitcoin's dead, waste of time, all that sort of stuff. And that's typical of this first half of the bull market. Like and subscribe. We'll be back with another video real soon. Otherwise, you've got some videos popping up on your left-hand side here. Link in the top of the video description to subscribe for the announcement of our new dashboard that's coming out very soon. Otherwise, I'll see you back in the next video. Until then, take care and peace out.